The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk. I'm Steve Sedgwick with Karen Cho, and these are your headlines. Chip equipment maker ASML looks to soothe concerns over AI investment plans with the Dutch company's fourth quarter numbers. I can tell you the net income has come in at 2.69 billion euros versus expectations of 2.64. The gross margin in the first quarter seen at 52 to 53%. We're going to hear from Christophe Fouquet, the CEO, first on CNBC. Elsewhere, Nvidia shares, well, they rebounded. It took a while because they were up around 4 or 5% for most of the session. Then they bounced right at the end to almost 9% higher, leading gains across technology stocks. Investors are seemingly, especially retail investors actually, piling back into the sector after the DeepSeek-driven sell-off.
UK Chancellor Rachel Reeves prepares to say she will go further and faster to improve the economy, warning that delivering growth won't come without a fight. We'll speak to the Conservative Shadow Financial Secretary to the Treasury, Gareth Davies, at 8:30 London time. LVMH tops fourth quarter sales expectations driven by gains in Europe and the US, despite the Dior and Louis Vuitton owner flagging an unfavourable global economic environment.
Well, what a rocky old few days, not just for US technology stocks, but also for ASML. Year to date, it's still down 4.7%. I wonder about these numbers. Are they going to soothe the market? If only we had our top tech guys standing by in Veldhoven, of all places. Oh, hang on, we have. It's Arjun. Look at the ASML numbers. What do you think, mate?
Absolutely, Steve. Well, they look like a blowout quarter here, really, for ASML. Let's just pour through the numbers very quickly and then address what you were saying about whether this is going to soothe the market fears around investment in infrastructure around AI. Q4 net sales coming in at 9.3 billion euros. That is ahead of expectations of 9.07 billion euros. Net income, 2.7 billion euros, ahead again of estimates of 2.63 billion euros as well. Net bookings coming in at just over 7 billion euros. This is a big jump from the previous quarter of 2.63 billion euros as well. And key here really is this was a record 2024 for ASML, a record Q4 as well. But the key, and this is what the market's going to be watching, what is the company saying about 2025? Now, ASML is expecting 2025 net sales to be between 30 and 35 billion euros with a gross margin between 51% and 53%. The market was looking for 2025 sales of 31.8 billion. So this is above that range and implies another record year in 2025. What is going to drive that growth? Well, according to the press release I have in my hand, Christophe Fouquet, the CEO, says that consistent with our view from the last quarter, the growth in artificial intelligence is the key driver for growth in our industry. It has created a shift in the market dynamics that is not benefiting all of our customers equally, which creates both opportunities and risks as reflected in our 2025 revenue range. So interestingly here, if we see what ASML is saying, they are very much saying that the AI story is intact. The investment case around AI is intact, and that investment in infrastructure is intact despite the chaos we've seen caused by DeepSeek over the past few days, guys.
Arjun, that's the point, isn't it, as we get set up for other big tech earnings this week, that the latest quarter is potentially going to be solid for a lot of big technology companies because of that AI strength we've seen to date. DeepSeek doesn't touch the sides yet, if it does in future. And the guidance I think we're going to hear from these companies, how unsettled they are, whether they think the orders could change. And that is the potential here. If companies think they can do it on the cheap, they might wait it out for a much more low-cost solution down the track, which would impact the sales numbers, whether it's the coming quarters or future quarters. That's the problem. And it doesn't feel as though we have that information yet.
Yeah, and this is the problem. How clear is the visibility for the rest of the year? And I think this is going to be such a key focus for European tech earnings, particularly around the semiconductor side of the equation and infrastructure side of the equation, but also as we move into the big US tech earnings season, there's going to be a lot of questions. What is your capex? You've committed this much this year. Is that still intact? Are you going to increase? Are you going to decrease? These are really the questions, I think. And obviously, we are hearing from Christophe Fouquet later when I speak to him at 8 a.m. CET, but a lot of the questions I think the investors are going to want to hear about is what is the capex looking like from your customers? What is the capex looking like from big tech? What is the capex looking like from the semiconductor manufacturers? These are still the questions swirling, and the key is how much visibility can we get, not just now, not just in Q1, but for the rest of 2025.
Arjun, thank you very much for bringing us those numbers. And later on this morning, we'll be looking forward to the interview. Arjun will be sitting down with the CEO of ASML to discuss those fourth quarter earnings. Don't miss that first on CNBC Conversation in just under an hour's time. And let's go to Michael Field, Chief Equity Strategist of Morningstar. Michael, it has been a roller coaster of week for technology names, anything linked to AI. And of course, ASML today, a lot of pressure on the earnings, but seems to have glided well and truly past some of the market expectations. Just weigh in on what we're seeing hit the tape this morning and in the context of a DeepSeek rout that markets have had to react to.
Good morning. So it's good to see some actual data points after kind of days of speculation around what will happen to the technology sector. But like you said, dissecting the results, generally speaking, they seem pretty decent. Sales, the revenue numbers, the margins, etc., are still, hugely strong. The one area of concern maybe we want to highlight is around the order book, and that's where everyone's putting their kind of future expectations on. And that came in at 2.6 billion, which isn't terrible, but we had expected a number or thought of a number around 4 billion that might actually excite the market. So that might change things this morning, perhaps.
Michael, if you're somewhat disappointed by the order number, what is that going to look like in coming quarters? Because to me, DeepSeek tells us there could be another way. And of course, we still have gaps in the information as to how DeepSeek managed to do this on the cheap, come up with AI solutions that others are spending billions creating. But if they are genuine here and we get all the pieces of the pie, does that mean companies will hold back and we could see a change to order books from ASML to NVIDIA and beyond on Wall Street?
So I think our main message, certainly over the last few days, and again reiterating this morning, is not to panic, that we haven't changed any of our fair value estimates for any of our stocks in the AI space or affected by the AI space. And I think that message is, again, similar this morning with ASML. Yes, I mentioned the order book isn't quite that blowout number that might excite the market. But at the same time, we know that these order books are lumpy. They don't come in the same every quarter. They don't increase exactly the amount we might expect every quarter. That these are, high value, low volume machines that they're selling. So yes, we're taking all this into account, DeepSeek and the changes that might happen. But everyone's become an expert in Yvonne's paradox over the last few days, and we do think that might have a positive effect ultimately.
Well, the good news is, Michael, I haven't become an expert on that in the last few days. I'm still the layman, and I'm still asking layman questions. And my first layman question for you as well is, there was a lot of puff in a lot of stocks in AI. Is ASML one of those stocks, or actually is it realistically priced?
So it's a fair point. Yes, indeed. And I think, you've seen every single company under the planet mention the words AI in the last couple of years in earnings calls to kind of get their numbers up or get excitement around the stock. But the big stocks that we've spoken about, and NVIDIA in the US and ASML here in Europe, are play on that AI theme. We don't think it's overvalued, or we don't think it's really full of puff. That genuinely, we think the numbers support the case, and actually we think the shares are worth more like 850, which, given the pullback you've seen in the last few weeks, offers a pretty good opportunity for investors.
Michael, I think there isn't a person on the planet who can't agree with Donald Trump on this one. Normally he's so contentious, but he said, yeah, it's a wake-up call. And whether DeepSeek has security concerns, whether they've been surreptitiously getting a load of chips that they shouldn't have done, whether there's cyber security concerns, whether the US Navy and others don't want to use it, it's almost irrelevant. The fact is, there are disruptors out there who are moving at speed and who are making the incumbents move very, very aggressively as well. Has the business case, the profit case, the margin case for the likes of OpenAI and the broader sector, has that just been diminished very aggressively by what DeepSeek represents rather than what DeepSeek actually is?
So I think you're right. And I think in the first instance about Donald Trump's comments, at least, and I think they were very kind of rational comments, if anything. And probably that's what the market believes as well, ultimately, that this is a good thing, generally speaking, if we can get the cost down of this whole AI process and the efficiency up. Ultimately, coming back to Yuval's paradox, it just expands the usage case for AI. So yes, there's some short-term disruption, and you've seen that in the AI share prices and investors trying to take stock of exactly what that means in the short term. But ultimately, what these companies are doing is very desirable. And in the kind of medium term, you might actually see a rollout of what the use cases for AI are and the actual usage of AI going up as a result. So again, it comes back to that message. For now, at least, we're certainly not panicking.
Michael, I take your point that greater adoption of AI could be one outcome here. But if you look at the market yesterday, we had retail traders just buying the dip, hoping that this was another entry point in some of the stocks that were sold off aggressively. I think those close to tech are very concerned that this is a fairly significant moment, perhaps a ticking point. So I'll ask the question, are we peak NVIDIA now? Is it a leadership change that we should be thinking about with greater AI adoption?
So we don't think that's the case, or we think it's very early to jump to that conclusion. Again, when retail investors are piling in, it's something of a cause for concern. You always wonder where the smart money is. But ultimately, I think the main catalyst and the main kind of proof that this could be, a shock to the system or could be a negative is a pullback in capex from the hyperscalers, the Metas, the Googles, the ones that have been funding this whole project in the first place. And until we see that, and we don't really think that's going to come in the next few quarters, certainly, then we don't think the whole system is broken, that those companies will continue to invest at scale, and that scale will just reach even further, given that the efficiency has possibly moved up.
Super duper. Michael, it's lovely chatting to you. Thank you very much indeed for kicking off our coverage of ASML and the tech sector this morning. Michael Field, who is Chief Equity Strategist at Morningstar. Well, goodness me. You want more knowledge on tech? You'll get it. I promise you. We've got 4 of the Magnificent 7 in the next 2 days reporting. Tesla, Microsoft, Meta kicking us off today. And for Tesla, well, yes, auto margins are in focus, but I wonder if it's the focus. In focus after the rebound in the third quarter, we'll also be looking for any discussion from Elon Musk about a future low-cost model. Yeah, again, important, but it's this, isn't it? Robo-taxis, self-driving, AI strategies, batteries. Remember when Elon Musk just was like Enzo Ferrari or Henry Ford? Now he does 1 or 2 more things. Those guys never did that much more, did they? Anyway, while Microsoft and Meta investors will be looking for any commentary on the impact of DeepSeek's AI model with CapEx spending at the big tech names in sharp focus.
Can I just bridge from that conversation we had from Michael? Because if we hear anything in this quarter or coming quarters that the likes of Meta and beyond will cut back on CapEx, what does it do to the share prices of the stock itself? Would be welcomed if there was a cutback in CapEx to NVIDIA that could be impacted. The hyperscalers are not investing.
I mean, we have a template on this, Karen, because remember when the big new shiny thing, and I love a big new shiny thing in tech because I can always burst the bubble and be right 95% of the time, when it was the metaverse and he was spending vast amounts of money. Now, does any of them mention the metaverse anymore? I mean, I think it's still going to be a great concept, by the way. But the fact of the matter is, and when he said we're going to have a reality check here, or whatever he said, I think it was 2023. This is Zuckerberg. And then actually, when they stopped spending money on it, that was the start of the share price rally of Meta, which has just gone one way since.
Well, exactly. So this is the point. We're seeing another version of that. If there is any AI hesitation that stretches beyond this week, can Meta control that by cutting back on CapEx?
It's complicated, isn't it? It's one of those complicated relationships because it's not like metaverse, which is a nice to have. AI is you got to have.
Yeah.
Microsoft and I think Reed's just disappeared. I saw what you did there, producers. I was about to read Logitech, wasn't I? Anyway, Microsoft and OpenAI are reportedly probing whether its data was erroneously accessed by a group linked to the Chinese AI startup upstart DeepSeek. This according to Bloomberg, which says Microsoft engineers last year observed large amounts of data being extracted from the OpenAI programming interface, which could have gone towards building the Chinese low-cost AI model. Neither Microsoft, not OpenAI, or DeepSeek have actually commented on this report. President Trump's AI czar, David Sachs, has accused DeepSeek's developers of training the new model on content from OpenAI. Well, there you go, similar story. Speaking on Fox News, Sachs said DeepSeek had been trained by a process known as distillation, in which it's alleged it asked OpenAI's ChatGPT millions of questions to learn and copy its reasoning process. Wow. Neither OpenAI nor DeepSeek have responded to the allegations. There's a lot of fur being thrown around on this one, Karen.
It gets more and more delicious by the day, doesn't it? Coming up on the show, LVMH posts its numbers for the full year. We'll see if the group was able to live up to its peers. Plus, UK Chancellor Rachel Reeves is expected to unveil a series of new pro-growth policies, reportedly including Europe's answer to Silicon Valley. We'll discuss. And ASML net sales topped 28 billion euros for the fiscal year, but it now finds itself caught up in the DeepSeek storm. Arjun will be sitting down with the CEO. Don't miss that first on CNBC Conversation at 7 GMT.
Oh, you've got to love Italian banking. It is at the epicenter of everything salacious and exciting across the broader financials in Europe at the moment. So, Italy's Mediobanca has rejected a bid from domestic rival Monte dei Paschi di Siena as consolidation sweeps the Italian banking sector. Mediobanca criticised the €13.3 billion offer as devoid of industrial and financial rationale, saying the deal would be destructive for the bank. Meanwhile, let's switch to Stockholm. I think we'd all like to switch to Stockholm sometimes, wouldn't we? The Swedish bank, SEB, has reported a net profit in the fourth quarter, narrowly lagging market expectations, focused on corporate clients now, more than some of its peers. 7.49 billion Swedish krona, which conversion is $683 million from a year ago of 8.37. So underwhelming perhaps on that front as well. Shall I give you a little bit of context? We've delivered our targets, they say, for the full year 2024 regarding return on equity, cost and capital. What else? Continue to invest in capabilities whilst maintaining strong focus on consolidation and efficiencies. I will just mention the credit losses at 377 million Swedish krona, because credit losses is kind of very interesting as the Riksbank has accelerated its rate cutting regime and as the Swedish economy just gets a foothold on stability after having a very tough couple of years. Now, on a programming note, Street Signs will be joined by the CEO. Johan Torgby will join us to discuss the lender's full year earnings. Don't miss that conversation, 9:45 GMT. And also later on today, Sylvia will be speaking to the Riksbank governor following the morning interest rate decision. That conversation coming up at 1200 GMT. And I'll tell you what we'll do something nice. We'll get Sylvia up for that decision at 8:30 London time. How about that?
Let's take a look at the market, which bounced back on the back of the DeepSeek rout that was triggered a day earlier. But it's been described as stabilization. I think investors, traders, tech geniuses still trying to work through exactly what this Chinese technology has come up with and how game-changing it will be. The wash-up from some of the analysts was, look, this could just simply fast-forward the AI revolution, which could actually bring forward more revenue models, not less, which was some of the concern a day earlier. But what does it mean for leadership change for a lot of those big tech names? At least yesterday, retail investors were getting back in, buying the dip on Nvidia stock, and that helped push it high. And you can see the Nasdaq itself too, up 2%. But the big moving name was Nvidia. interesting for me was Salesforce, and this was a company that caught a bid during the height of the selling on Monday and helped propel the Dow forward. Again, in focus, the top mover for the Dow yesterday, that was ahead. So we're still seeing some investors now trying to pivot those AI trades to other areas further down the track, away from the picks and shovels, and I think that'll be the question for the next couple of weeks. So the Dow up 1/3%, but again outpaced by the Nasdaq. FANG Plus stocks are well and truly out in front. Let's take a look at Nvidia itself and how the stock performed. You can see it rallying close to 9%, so not quite the 17% that came off a day earlier, but certainly bouncing to the upside. And US big technology names are away from Nvidia. They were also stripped of some of their market cap a day earlier. Microsoft putting on 2.9%. It had drifted off about 2% a day earlier. Apple stock, this has been one company that has been somewhat left behind in recent weeks around the AI race, but now seen as a growth stock. And again, yesterday at the forefront of some of that buying, up 3.6%. So this is a point around leadership change that we're seeing. Alphabet trading higher, and Meta as well. And of course, a lot of tech earnings out this week, which could again have some impact on these stocks this week, Steve.
I love the fact that we have prompts sometimes. And can we let the viewers know a little bit of a secret? We don't always read the stories in advance. I know that's bad because...
We'll read the stories that are on the screen.
On the screen. We trust our brilliant team of producers, you know, Katie, Britt, Mike and David and the rest of the brilliant producers. We trust them to write brilliant copy for us. But I always get quite excited when I haven't read a read and I want to know what's going on next. So my prompt says, Rachel Reeves is expected to warn.
Should we guess what it is? About growth? I think growth.
I reckon she's expected to warn that government policies have ruined the growth potential. No, she wouldn't do that, would she? That she's expected to warn that if you tax people too much, you don't create private sector. No, she wouldn't do that, would she? I don't know, what's she warning? Should we find out?
Warn that we could be left behind versus the US?
Yes, that we're going to become a museum piece. I reckon she's warning that. Or is she? Anyway, let's find out. Rachel Reeves is expected to warn the UK must fight for economic growth. Oh, that's what it is. Must fight for economic growth in a highly anticipated address this morning, with the Chancellor set to unveil reforms, including plans to develop Oxford-Cambridge Growth Corridor. Okay. Ahead of the speech, Prime Minister Sir Keir Starmer vowed to, quote, cut the weeds of regulation and let growth bloom, whilst also putting up taxes. Calling it essential for realising his government's ambitions. I'm sorry, do we think by adding vast amounts of extra costs to the private sector, to the small and medium-sized companies, the big companies I'm not worried about, they can afford it, do we think that that's the best growth strategy? I don't know.
Well, there's two parts to this growth story. One part being the future and how we get AI, we get technology going. And one of the big chats I had
the Mitterrand type grand project, the big. Do you remember when he built the Opera House and all these things? And they went over, but they were big projects you're talking about, yeah?
Big projects that move the needle on economic growth. So there's that aspect, and there's a second aspect about all the existing businesses on the high street, for instance, and beyond. They're going to be impacted by these government measures right here and now. So I think there are two arms to that, and the one we're talking about is Sainsbury's and every other retail company now looking at their spending patterns and saying, look, we're facing a whole heap of taxation, higher costs here in terms of wages. This is not sustainable. So there's a huge negative, a big cloud overhanging Reeves today, I think. But from the growth perspective, anything around technology would be welcome. I had conversations with big tech investors. And I was asking them, what keeps going wrong? Why do we not have any amazing exports in technology? They said, look, there's no shortage of graduates. There's a ton of amazing UK graduates. So big tick for the education system here. But they go and end up working at Google and Facebook and Microsoft and beyond because there's no route to market for any of the innovations they come up with. And I think that is the disconnect that the Chancellor is hoping to try and correct. I mean, every turn that you have, every conversation you have leads to the fact that that middle section is just missing in the UK. There's no incentive to take anything to market.
No, all valid points. I'll just say one really basic, I don't even know what an Oxford-Cambridge corridor is. I haven't read the story yet, but all I will say is you've got brilliant people in Oxford, you've got brilliant people in Cambridge. Why do you need a corridor between the two? We're not Texas, we're not the size of Western Europe, we are a tiny country.
What about a corridor to capital markets?
Rather than building
to the London Stock Exchange.
Rather than building out this area between, why don't you just focus on these two unbelievable centres of excellence?
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.